Hey, everybody, we are back at Monetary Metals Summit or Money Metals Summit 2021, and I have what may be the most dangerous group of speakers I've ever scheduled on the program. My good friend Chris Marcus of Arcadia Economics, James Anderson at ST Boyne, and Dave Kranzler, Denver Dave of Investment Research Dynamics. Gentlemen, how are you doing? Well, everybody, this is the State of the Union on gold and silver markets, and I named it that on purpose because I thought we could talk about whatever the hell we wanted to. So I'm just going to leave it up to you guys and have some fun. You guys are the experts, so I'll start off with Dave. What do you want to say about gold and silver right now, especially with all of the investor sentiment being so low, people being kind of honestly pissed off that gold and silver aren't trading higher? You know, what's your outlook on gold and silver? Should people be worrying right now about the metals prices?
Well, it's just a funny story. A colleague of mine earlier has been involved in the sector for quite a long time. I've known him for a long time. He asked me, he said, I said, you know, the mining stocks are getting incinerated here. And he asked me, yeah, when are they going to stop going down? I said, well, they have to stop at zero, right?
Can we get negative on the mining stocks? Is that possible?
No, I'm definitely not negative on the mining stock. In fact, you know, I think, you know, barring a stock market accident, I think the sector's setting up for a hell of a move at some point.
I do too.
You know, I'm not saying it's going to happen tomorrow or next week, but sometime in the next couple months. I mean, in terms of gold and silver, for me, it's important to differentiate between the paper derivative gold and silver markets and the actual physical gold and silver markets. So like when you know, when the COMEX opens and all of a sudden you look at the say, I use a 15-minute gold chart, you know, when I'm just watching it minute by minute, and you see what looks like a fishing line formation. That's not people selling physical gold bars on the COMEX. That's the derivative market, and it's you know, just like the Fed can print an unlimited supply of paper money, the COMEX banks can print an unlimited supply of paper gold and silver contracts, and so it makes it easy for them over short-term periods of time to manipulate the market that way. And you know, the same thing goes on in London with the AM and PM fixes with the phony unallocated gold that clears the market twice a day. So I mean, at some point I think you're gonna, you know, and no one knows when, and you know, we don't know what the circumstances will be when it happens. We're going to get a pretty healthy reversal in this. And you know, one thing that I pointed out in my latest issue of the Mining Stock Journal that went out this afternoon is that the per the Commitment of Traders report, the banks, you know, the COMEX bullion banks, they're, as of the last report, they were their net short position in paper silver had collapsed considerably. They were short about 3,700 contracts of paper, net short, you know, longs the short position less the long position. And at the end of, I think it was the end of January, they were net short 21,000 contracts. So historically, when they've collapsed their position, you know, it's preceded a pretty good move in the sector.
Right.
So, you know, like the last time we saw that happen was the fall of 2015. And I'd have to go back and look at the data for specific dates. And then, you know, obviously the market bottomed at the end of December that year. And I actually think there's a chance, just based on the movement in the daily open interest reports and the silver open interest, I think there's a chance that tomorrow's COT report will show that the banks might be net long silver, which is very bullish in my opinion.
But what are your thoughts on the state of the gold and silver markets? Are we at a cyclical low? Do you see this kind of sideways range, kind of bullshit trading keep going on, or where are we at that point?
Yeah, I mean, we're just in a year of sideways action, right? I mean, it's got that look technically when you look at the chart, especially for like gold. You know, is it going to ever rebound and go beyond its old, you know, its record high of what, a year ago, 2,067 an ounce? I just go back to the fiat M0, 1, 2, 3 aggregates. You know, go back to all the major fiat currencies in the world, and they're all climbing a wall. And we can control gold and silver prices on the spot market with derivatives for a while. But, you know, if you're going to run the fiat currencies in terms of the bases of the fiat currencies up a wall, eventually that's higher gold and silver prices. And you can tell that they're rigging the gold and silver prices so strongly this year. If you look at how commodities have performed in general, you can just pull up a chart of all commodities.
James, real quick for you. As you said, commodities complex is blowing up. Why not gold and silver? Why specifically are gold and silver not following the rest of the commodities complex, the copper, the lithium, all that?
It's stuff. It's the outsized trading in the derivatives markets that are controlled by mostly the naked short positions by the commercial banks. And right now, of late, last few months, the suspicion is, and I think it's probably true, is that a lot of commercial banks have been losing in the last year or so, and they're trying to get out from under some of the positions that they have. In order to do that, you gotta create huge waterfall declines like we saw the other Sunday night in the middle of, right when COMEX traded at the most illiquid moment. When you see them drop the price of gold almost $125, they're up to no good, and they're obviously doing it for real reasons. And just go back a couple of years ago. You had Scotiabank literally had to close their entire desk because they're getting their ass kicked by the longs. Just a matter of time before that occurs again. It's going to be, again, the same kind of repeat. Some of these banks are going to get caught or on the wrong side, and they're going to get their scalps taken by other banks. This happens all the time. And when that happens on the long side, we start moving up a wall. I just think we're just waiting for a matter of time. You have to be – I know it's hard to say this because it's – all the factors say that gold and silver's prices should be screaming and climbing up a wall, but they will. It's just a matter of the timing. I think the powers that be, they ultimately do have a lot of control because they run the derivative markets.
I agree with you. So I'm going to throw out a question from the audience, the virtual audience. And if anybody here wants to ask a question, please step up to the mic and I'll ask it for you. Question, how are we seeing the short positions being unwound? I'm assuming that means on the COT report, the COMEX positions.
I just pasted the link to one. I don't know if you can go back in time on their junk website, which is specifically designed to make it as hard for honest investors to get real information as possible. But at least at that link I just posted, you can see interest and then times 5,000. And then you see there's a column that says percentage held by the 4 biggest shorts, 8 biggest shorts. Mm-hmm. And if I'm remembering the number correctly from early February, it seems like it's quite a bit lower. I'm getting, can do it again, but it seems to be quite a bit lower. Nick Laird's gold charts sends out a few things. Rob, I can email you the picture to that if you'd like, but that's hopefully that helps a little.
It does. I have another question. I'm going to throw this over to you, Dave. Do we have to await a movement of metal exchanges to China, Middle East? Meaning, do we think the metal is going to start trading away from COMEX LBMA? Is Basel III going to play into that? Or what happens with the global gold market? Is it moving away from London? Is it moving away from?
Oh, it already has. China is the biggest physical trading bullion market in the world. Mm-hmm. So, and it's hard to really make the argument that London really does much physical gold trading. I mean, what you see at the AM and PM fix when the price is set, that clears the market between sellers, which a lot of times it's going to be producers, selling out their doré bars or whatever, or selling out delivery obligations for their bars. A lot of what trades is just unallocated gold bars that are sitting in bullion bank vaults that have already been allocated out many times. Mm-hmm. And the reason why they can get away with it is because so many entities leave their bullion in those vaults when they quote unquote buy it. I mean, even central banks do. When you read that Brazil purchased however many tons it was recently, they leave that gold gets left in these London banks, and then the London banks sit there and reallocate it out many times. I mean, I know, James, you remember, and I'm sure you guys saw the recordings of it when Jeffrey Christian blurted out there's a 2010 GATA hearing on the silver manipulation that Bart Chilton conducted. Yeah. And Jeffrey Christian blurted out that the ratio of paper gold to physical gold in London was 100 to 1. Yeah. And then, believe it or not, a couple weeks later, the VP, the Minister of Finance of India actually pretty much confirmed that number. He said it was 93 to 1.
Yeah, Central Bank had a report.
Yeah, and so I mean, I would argue that the physical gold trading market has already shifted to the Eastern Hemisphere, and Shanghai is the hub.
So another question for you guys. How much gold and silver does the U.S. really hold? Do we have any true idea of what that number is?
Yeah, I do the number all the time because I use it as a target because there's a historic precedent. And, over time, it seems like every 60, 70 years that the currency goes wrong, goes sideways, and the gold, official gold has to reaccount 40 to 100%, depending on how bad things go. And my target is just 40%, which is all it has to do is repeat what it did in 1933, 34. And you got to have like $9,000 an ounce gold today with all the currency they've created in the M0, just the base supply. I'm not even taking the M1 or M2 or M3 supply. If this goes out of hand, you could get to 20, 30,000 silliness, if it gets hyperinflationary or something ugly like that. But this is just precedent. This is historic precedent. It happened after the U.S. Civil War. It happened after the Great Depression, and it happened in 1980. And this time it's going to happen on a worldwide basis, probably in every currency you know of that's fiat. So idea that the U.S. government's never going to do an audit. Don't ever expect it. Don't ever expect it. Expect that someday China's going to come out and say, they have. Oh, by the way, I was looking today. I'll tweet it out. It's a Chinese website. I was looking at whether or not this is believable, but it's according to a yearbook that's issued by the China Gold Association. Declared today, August 19th, from Xinhua, China's gold reserves have grown every year for 15 consecutive years, reaching 14,727.16 tons by 2020. So it's an official, the China Gold Association is an official spokesperson for the Chinese gold market, and they're putting a pretty explicit number on the amount of tons that supposedly China has in their official reserves. I mean, 14,727 is 75% more than the U.S. claims, and it's probably about 60% more than the EU if you add up all the EU's gold. So if China puts that kind of number on an official line and people all start believing it, I mean, people think that China have like 100 tons of gold, but the truth is they probably add a zero to that number, and you'll start to get a real feel for how much official gold they really have. I mean, Dave is correct. Everything. They are the major player in real commodities in the physical market, and they are the biggest player in terms of gold for the last 15, 20 years. They've been that way.
I guess just to add on to that, I mean, this is, whether or not the Fed really had all the, the 8,100 tons they say they have, and it's technically, it's the Treasury's gold, which means it's the U.S. public's gold. And I used to dig into that issue all the time 15 years ago. And I mean, there's always going to be a large body of people who won't believe it until, something happens and people go into Fort Knox or the vaults at West Point or the vaults in New York City or Delaware and, and see that, and they do an official audit and they're like, oh, the U.S., the cupboard's empty. But I mean, there's a reason why there hasn't been a formal, official, independent audit of the gold since Eisenhower was in office. There's a reason for that. And if the Fed really does have all that possession of all that gold, why don't they just prove it by giving us an audit? Okay. And, another thing that I mean, this used to really bother me, but you guys remember Ron Paul, I think 3 different times he tried to push through an audit the Fed bill, starting in the House Finance Committee. And Bernie, whatever his name, the guy Sanders. Bernie Sanders. Not Bernie Sanders.
Barney Frank.
Barney Frank, yeah. Barney Frank. He's been gone long enough, I forget his name. But every single time, Barney Frank quashed the bill, quashed the legislation, and it never got out of the House Finance Committee. Now, what does the government have to hide? Why won't they let the public have a formal audit of its gold? That's the taxpayers' gold. Mm-hmm. So, I mean, yeah, there's going to be people who need hard evidence, but to me, there's enough footprints in the snow leading to the cave enough bear footprints that the bear is in the cave, even though you haven't seen it with your own eyes. In this case, the gold is not in the Fed's cave. So, I'd be surprised if the Fed has actual possession or unencumbered possession, meaning, it's leased most of that gold out. I'd be surprised if there's anything in there.
All right, we have a quick question from an audience member here in attendance in Dallas. Go ahead.
Thank you.
All right, so 2 questions. I'll restate them in case you guys didn't hear it online. First question was, how comfortable do you feel using a segregated account at a Brinks in the United States, right? Would you feel safe about having your gold there?
I'll speak to that because I've been to Brinks Salt Lake personally and was there in 2009-10, right when that got spearheaded and the industry started adding segregated accounts there. If you're ever at Brinks Salt Lake City and you actually been inside that facility, it's not like a James Bond type of place. It's a depository that's, bonded warehouse. It's like guys who are getting paid $15 an hour to walk around with guns on their waists, right? So it's not glamorous, but it is real. And those people are just hardworking blue collar type people who protect the precious metals there. If you got a segregated account directly with Brinks, they'll make you whole no matter what. Brinks has been around since 1880. So even if something really goes sideways, they'll make you whole no matter what because their brand is worth more than anything else. So yeah, I feel pretty safe with that. I think sometimes I get worried if there's a middleman between you and your gold. For instance, if there's a master sub account, sometimes that's worrisome. But if you have a direct account with one like a Brinks or a Loomis, a G4S, a Malka, a Mott, they're not going to screw up your account and ruin their brand. They have insurance to back that kind of stuff up. So I feel safe not having everything, but I feel safe having multiple things in different places. That to me is totally safe.
So in case you guys didn't hear it, he was asking what percentage of cash do you feel comfortable in the next 6 months holding? Would it be 25, 5%? I say from my perspective, I hold a fair amount of cash in my business account specifically because I don't know, it's just kind of there. No particular reason, but I'm not heavy into cash. I'm mostly into precious metals, farmland, defensive investments with enough cash to survive if we had, if the economy stopped tomorrow, I could survive for 6 months and then I could start liquidating stuff. What are your guys' views on that? Are you heavy cash or are you putting it all into the precious metals or what's your choice there?
So personally, I speak on my behalf, my own investing. I'm very aggressive currently because I have a belief that in the next 5-10 years, bullion is going to perform. But having an allocation of cash makes total sense given how high the market is. We could have another type of crash like March 2020 at any time. So to be out there, if you want to divest and move into other asset classes, having cash when that time comes is important. But it's also good to know that bullion is one of the most liquid assets. You can essentially turn that into cash within 24 hours. All it takes is one phone call. Yeah, I mean, all it takes is for it to logistically be in one place to deliver it, in secure form, and then you'll be paid right away. So it's almost near cash. It's as near cash as you could pretty much be.
You can put an ad on Craigslist, and you can have cash for silver in an hour. At least in Denver, you can.
Speaking of Brinks Salt Lake City, there's like 10 dealers there. You call up a dealer, it's at Brinks Salt Lake City. You can get a bank wire within a day or two.
So we gotten this question a bunch of times, both virtually and here at the conference. What do you think about Palantir's $50 million purchase of physical 100-ounce gold bars? Why are they buying that gold?
Because they're not idiots.
One interesting part about that story is I guess it's like 2% of their cash reserves. Like right now, look, this is only their first purchase. Maybe they're going to get more. It's sitting in the northeast of the United States, which means it's sitting in a COMEX warehouse because that's most likely what that means. They didn't say it explicitly, but that's likely where it is. But that's just kind of a sign. It's what you're going to end up seeing is the COMEX during COVID 2020 and 2021. You saw, especially in 2020, London essentially wasn't working, and all of a sudden the COMEX became like a physical, more physically delivered in warehouse receipts than it ever. What we've not seen yet is enough people pulling it fully out of the COMEX system, taking it out of the Northeast, moving it to Brinks Salt Lake City or to Loomis, Miami, Loomis, LA, et cetera. And that I think eventually is what you will see because people do any type of research on the COMEX and they look at the protocols that system has in place. And you saw the other day, the fat finger entry in Loomis, they had all of a sudden 1.3 billion ounces of silver somehow fit in there because an Excel spreadsheet had an extra zero. And it makes you think, wow, that can happen in just 24 hours. And then they fix it and they don't say a thing. I mean, how many other errors are there in their reporting that have gone unnoticed? I mean, it starts to make you question. And you go back and look at, Kyle Bass in 2011 and his experience in that. And if you've ever been at these warehouses, you realize what a joke it is. It's farcical. And have no middleman between it. If you have bullion, having a middleman or any other exchange in between it is not smart. So I think these people are getting smart, but they got to get smarter in between.
All right.
James, what if Jeff Curry's the middleman? Does that make you feel any better?
No, Jeff Curry and Jeff Curry.
In terms of where they have the bullion, it's not clear. I mean, there are some non-COMEX vaults in the Northeast. My fund keeps its bullion in a non-COMEX vault intentionally. And I actually emailed Ronan yesterday when I saw the news report and asked him if he would probe it, look into that, and call the company. And so hopefully he'll be able to get some definitive answers. But it's to me, it was kind of a perplexing move for Palantir to do that. I mean, especially if you look at their financials on a trailing 12-month basis, they generated 1.2 billion in operating losses. So I think to me, it was kind of weird that they're allocating 50,000 in cash or 50 million in cash that they're going to probably need at some point to fund their operations. Or at least now they could probably still sell stock, but we get into a rocky stock market, they're not going to be able to sell stock. So I think there's more to the story than is apparent on the surface, and hopefully Ronan can get to the bottom of it.
All right, you guys are popular locally. We got lots of questions and answers here in Dallas. Go ahead, James. Question for you: what do you see in terms of black swans? Any traditional black swans that you think could occur in the next 6 months to a year?
Commercial banking system, I'm sure, is rotten to the core, and we haven't come to full grips with that yet. There's been moratoriums on all types of rents and paying of houses, and that's helped to make this bubble recently and FOMO squeeze into housing that's caused the median price to shoot up. I think it was almost $380,000 for a median house in the United States, that's pretty high. It's pretty outrageous for the middle house in the United States. About the prior topic, which is a dark topic, but just use your own common sense. If human beings have committed evil in the past, it's quite possible that they'll repeat that. It's not like the negative, of genocide or of democide with governments. Like that'll repeat again because history just rhymes. So with technology and such, it could be even more on a larger scale. So yeah, you better have your antenna up these days, given what's going on. So there's nothing wrong with being skeptical about what you hear and doing. So, but the black swans, Robert, they're everywhere. Anything can happen. The one thing is that's what we're trying to do is just be prepared, because we all know the system's rotten to the core. We look at it every day. It's a moving, walking fraud. We live in a world of carnivalness. It's very hard to find anything that's real and genuine.
Isn't it,
James?
if we're like talking about what we see as being potential black swans, doesn't that definitionally mean that they can't be the black swans?
No.
You're not supposed to be able to see them coming.
They were just smarter than everybody, Dave.
Dave, I bet I got a couple black swans I could show you. Although James,
I would actually argue that the black swan is hidden in plain sight right now, and it's inflation / dollar devaluation, and it's forget this transitory bullshit. I don't know if Powell really believes that, or if he's just trying to spread his bullshit around the country. But this inflation is going to get a lot worse, and it's probably going to get a lot worse very quickly. And it's going to keep getting worse until the Fed stops printing money. But I think not only do they have to not just stop printing money, I think they have to start removing a lot of the money that they've already printed. So, I think inflation is at some point it's going to start really raging and really freak people out and freak the markets out.
Yeah, if somebody wants to send me some of the pallets of all that money floating around, I wouldn't mind. I'll I'll take that donation and go buy some precious metals with it.
Right, exactly.
Right. We have another question this time from Chris Glizio here in Dallas. Chris, what's your question? To summarize that question, will the mining stocks outrun the collapse of the dollar, I think is essentially what he's asking.
May I take first crack at that, Rob?
You do if you don't take more than 3 minutes, Chris.
I think it's a great time. At least what I've been doing is thinking differently. I mean, we've been trained to treat the stock market like a casino, yet I'm not price. I mean, my premise is that we're going to have a substantially higher price. So if silver is $200 or $2,000 or whatever they hyperinflate the dollar, or have already hyperinflated the dollar to, if I own shares of First Majestic, that's what stock ownership is. You're a part business owner. And I know we have businesses like Tesla and Enron today where it's like, as long as you can juice the thing up and Jeff Kramer to juice it up and dump it, that's what I think people are like 20 years old. I mean, understandably, that's what they think it is. But, all right, so if the dollar collapses, but silver is what it is per ounce, and I'm a part owner, well, if it costs $20 to get silver out of the ground and it's trading at 50 or 100 or 200 or 500 or whatever it would have to go to do the math on the fraction, it has to be a big number. They printed so many dollars. You know, that's how I would look at it. It won't matter to me what the dollar price is. Hey, I'll have something. It's like if you had a crypto mining and it's worth a lot more than at $2,000. And if you like cryptos, you have the crypto and you have plenty of dollars if you want to trade it. So that's at least how I look at that.
All right. 1 minute, Dave. What do you think? Answer that question. How are the mining stocks going to do when the dollar goes?
I mean, the guy who asked the question basically kind of answered his own question elegantly. I mean, when you own stocks and you sell stocks, all of a sudden you're long dollars. And if you know, when it gets to the Weimar moment in this country, you don't want to own anything dollar denominated. Gold isn't dollar denominated. Gold is denominated in gold. So, you know, the people who held gold on November 14th, 1923 in Germany, they made it through that crisis, you know, pretty much intact, other than they had to look at the world around them. So, you know, my theory or my thesis the whole time since I got into this sector in 2001, knowing that, you know, let's say I'm 50-50 bullion and mining stocks, knowing that at some point, you know, owning the mining stocks is going to be the same thing as owning dollars. And so what I'm hoping is that I can at some point time it correctly so that I can get my mining stocks liquidated, take the dollars and convert it into gold and silver before the whole thing collapses.
Did that answer your question?
Well, and that's also why I'm 50-50 bullion and stocks. And at some points I'm even higher percentage of physical that I keep myself.
Dave,
We got a follow-up.
thank you so much. Just to follow on to your excellent thought process. So I think a lot of investors think that if I have, maybe Chris thinks this way, if I have 10 shares of First Majestic silver, after the dollar goes to practically nothing and nobody trusts it anymore, at some time, some new currency will come and I'll get revalued in that new currency. So I'll be safe on the other side. But Dave, you're saying, I want to get out before that happens. So
everybody subscribe to Dave's newsletters. That's right, because David's going to let you know when that's coming, and he's going to tell you when to hit the bell button.
I can just tell you where the ultimate bottom could be, which is zero, right? I don't know how high it's going to go or when that's going to start.
Everybody's going to be depending on you for timing, Dave. So
I'm hoping for negative 40.
Influx of emails. James, you want to take a shot at that one as our last response in the roundtable?
I have mining shares, but I'm much more aggressive in physical bullion. I ultimately think we, kind of like the 1970s bullion bull market, where bullion outperformed mostly until about 1980, and then the miners after the peak really kicked ass. So I kind of reverse thinking, and I don't necessarily know if we're going to go into hyperinflation. I really hope not. But it may be a situation where you have bullion outperform and then the miners do better after the peak has been hit. So I wouldn't go all in on any bet. I just wouldn't. But I would be pretty aggressive in this precious metal sector, given all the fundamentals we laid out today.
Awesome, guys. Well, that'll do it for this round table, the state of the gold and silver in the market. Thank you guys so much for joining. We appreciate you having us.
Thanks for having us.
Thank you, Chris.
Thanks, Rob.
Thank you, James.
Yeah, all the best.
Hey guys, don't forget to hit that subscribe button and the bell for notifications, and go to goldsilverpost.com and sign up for the free newsletter so you can get your updates.